As of right now, Thursday, March 5th, 2026, at approximately 1:18 p.m. Eastern Time, BigBear.ai, trading under the ticker BBAI, is currently priced at $3.95 per share. We are seeing a healthy intraday move of roughly 3.4% to the upside today, with the stock bouncing around between a low of $3.77 and a high of $4.04 during this session. It's a bit of a relief rally after some choppy performance earlier in the week following their earnings release, and if you've been watching the tape, the volume is actually picking up significantly compared to the sleepy sessions we saw last month. Now, here is what most people are missing. While the surface-level narrative suggests BigBear.ai is just another small-cap tech name struggling to maintain its footing after a revenue miss, the real story is buried in the balance sheet. Most retail investors are staring at the 20% drop over the last few months, but the institutional desks are looking at the fact that the company just wiped a massive chunk of debt off its books. The market expected a growth-at-all-costs failure, but the reality is that BigBear.ai has shifted into a defensive financial posture that actually makes it a lot more resilient than the bigger, more bloated names in the space. They aren't just burning through cash anymore. They've cleaned up their capital structure to the point where they have over $600 million in equity, compared to a deficit just a year ago. That is a massive swing that hasn't been fully priced into the current $3.95 valuation. When you look at the broader context of online investing right now, there's a lot of noise. You have the massive volatility in Nvidia stock and Apple stock drawing all the oxygen out of the room, leaving names like BBAI to trade on thin volume. However, the expectations for this company were set so low following their fourth quarter revenue miss that any sign of stabilization is starting to trigger a buy-the-dip mentality. The market was looking for $170 million in revenue, and they came in soft, which usually sends a stock into a death spiral. Instead, we're seeing support hold firmly around that $3.70 to $3.80 range. This suggests that the smart money isn't looking at last quarter's top line. They are looking at the 2026 guidance, which projects revenue between $135 million and $165 million. If they hit the high end of that, the current price is going to look like a massive steal. Let's talk about how people are actually trading this. If you are using a Fidelity trading platform or perhaps the Robinhood app, you've probably noticed that the retail sentiment is still quite fearful. But if you check the data on Interactive Brokers trading or deeper institutional flows, you'll see that big blocks are being moved at these levels. It's a classic case of expectation versus reality. The expectation was that BigBear.ai would continue to dilute shareholders into oblivion to stay afloat. The reality is that they've used recent capital raises to essentially fix their future. They've integrated acquisitions like Ask Sage and CargoSeer, which aren't just flashy names. They provide recurring revenue from the federal government. This isn't speculative software, it's infrastructure-level AI that the Department of Defense is actually using. The trading volume today is particularly interesting because it follows a period where short interest was peaking at over 30%. When you have that much of the float bet against a company, and the company releases a financial report that shows they are in the strongest cash position of their history, you create a powder keg for a short covering rally. We might be seeing the very early stages of that right now. While most people are distracted by whether or not Tesla stock is going to hit a new local high, the real percentage gains often happen in these smaller, beaten-down names that have finally found a floor. I want to hear from you on this one. Comment below how many shares of BBAI you currently hold, or if you're looking at other names in the sector like C3.ai instead. When we look at the mechanics of the business, BigBear.ai is fundamentally a data company. They take massive, messy data sets from government and defense agencies and turn them into something actionable using predictive analytics. In 2025, they faced a lot of headwinds. The U.S. Army had some lulls in activity, and they had one-off revenue boosts in the prior year that made their year-over-year comparisons look much worse than they actually were. This created a phantom decline that scared off the casual observer. But if you look at their backlog growth, which surged over 150%, you realize that the demand for their services is actually accelerating even if the timing of the contract payments hasn't smoothed out yet. This is a recurring theme in defense tech. It's not like selling a subscription on a Fidelity mobile app where the revenue is predictable and monthly. Government contracts are lumpy. They're big, they're slow, and they're complicated. But once you're in, you're in. By acquiring Ask Sage, BigBear.ai gained a FedRAMP certified platform. For those who aren't familiar with the jargon, that basically means they have a golden ticket to sell secure AI services to the federal government. It's a barrier to entry that most of their competitors simply haven't crossed yet. This is why the institutional interest in BBAI is starting to ramp up even while the price remains under $5. If you're managing your own money through something like Schwab Intelligent Portfolios or a SoFi Active Investing account, you know that diversification is key, but so is finding asymmetric risk. Right now, BigBear.ai offers that. The downside is fairly well defined by their cash on hand and their lack of immediate debt pressure. The upside, however, is tied to the U.S. government's frantic push to catch up in AI. We're seeing a massive shift in how the military views technology, and Big Bear is sitting right at the intersection of that shift. Now, let's look at the risks, because no analysis is complete without being direct about what could go wrong. The reality of the situation is that BigBear.ai still has a lot to prove regarding its organic growth. They've used acquisitions to bolster their numbers, but the market wants to see their core business expand without just buying other companies. There's also the issue of share count. The share count surged nearly 75% recently because of their capital raises. That is a lot of new supply for the market to absorb. If the company doesn't show a clear path to profitability in the next 2 quarters, that extra supply is going to act like a ceiling on the stock price, no matter how much investment help or positive sentiment you see on investing sites. The macroeconomic pressure is another factor. With crude oil prices fluctuating and geopolitical tensions in the Middle East causing a risk-off environment in the broader markets, small-cap stocks are usually the first to be sold. We saw this on March 4th when the Nifty and the S&P both took a hit. If the general market continues to bleed, it won't matter how good Big Bear's balance sheet is, it will get dragged down with the rest of the sector. This is why it's important to watch that $3.70 support level. If that breaks, we could see a slide towards the $3 mark. However, the contrast between the public's fear and the company's internal stability is where the opportunity lies. The management is projecting 2026 to be the year they finally turn the corner. They're looking at 0.01 EPS. It's a tiny number, but the difference between losing money and making even a single penny is massive for a company's valuation. It's the difference between being a speculative gamble and being a legitimate self-sustaining business. If you are using SoFi Invest or a Fidelity brokerage account to build a long-term position, these are the kinds of technical milestones you need to be watching. The future outlook for BigBear.ai really hinges on their ability to execute on the Ask Sage and CargoSeer integrations. If they can show that these aren't just separate entities but a unified AI platform, they could start seeing the kind of valuation multiples that Palantir enjoys. Right now, BBAI is trading at a forward price-to-sales ratio that is significantly lower than its peers. The market is pricing it like a failing defense contractor, but the financials suggest it's becoming a lean AI powerhouse. The institutional activity we've seen in early 2026 is the most telling sign. We're seeing a 10-to-1 buy-to-sell ratio among certain institutional desks at these levels. They are providing the floor. They are the ones who are quietly accumulating while retail investors are panic selling because the stock didn't moon immediately after an earnings call. This is the classic reality check. The public expects instant gratification while the professionals are playing a multi-year game of capital repositioning. To wrap this up, the situation with BigBear.ai is a textbook example of a company that has fixed its internal problems but hasn't yet regained the market's trust. The stock price of $3.95 reflects a lingering skepticism that may no longer be justified by the actual numbers. We have a company with record cash/debt, a massive backlog, and critical government certifications. The expectation is continued struggle. The reality is a much cleaner, more capable organization than we saw a year ago. We've covered the daily swings, the massive institutional shift, and the